Hey guys, what's up? Alec back with the daily stock market, and look at that, Robinhood right at $10 per share. So in this video, what we're going to talk about is the best stocks under $10 per share. We have SoFi, Matterport, Snapchat, Palantir, and maybe even SPCE to talk about. So make sure you stay throughout this entire video and smash a big thumbs up on it because you know it's going to be a banger, and share with a friend. Without further ado, let's jump right into it. So first up, we have Robinhood, up 31% in the past month, so it's gaining some momentum. However, it's down 77% in the past year, which is why it's only $10 per share, because just a year ago, it was closer to $50 per share. Now, I know a lot of people like the stocks under $10 per share because they think that they can have bigger gains, okay? But remember, there's also more risks with stocks that are under $10 per share. Robinhood is kind of balancing on the fine line where the risk versus reward is almost making sense at this point. However, I think around $7, $6 per share is going to be a lot more attractive. If we scroll down, we can see that I have a very small position, just averaging in $5 per day, up 18% on the swing trade. We can see, more importantly, that the market cap is around $10 billion. So the question is, how big can the market cap possibly get? And a 2 to 3x on the market cap is definitely not out of the question to see Robinhood around $25, $20 per share once again. Even $17 per share, I think it's going to be relatively easy for Robinhood to bounce back to those price points. Obviously, they're still a not profitable company right now, so it's still risky to invest in them, but they haven't been missing earnings by much the last 3 quarters, and the last quarter they actually beat earnings expectations, which is a good thing. If we read an article, we can see that it might be a good idea for Robinhood to join forces with a larger Wall Street rival, like, E-Trade or Fidelity or someone like that. Robinhood, as its name suggests, was designed to take power from the stock market away from the rich fat cats on Wall Street and hand it over to regular people. Now, ironically, Robinhood may need to join forces with one of the very titans of Wall Street that the stock and crypto trading company was trying to unseat. Robinhood reports a big loss, a drop in active users, and its second round layoffs of 2022 in early August. The stock went public a little more than a year ago, and it's down 40% this year. It's nearly trading 75% below its initial public offering price. They are having to make grown-up business decisions such as cost reductions and moving out of growth mode. So overall, you might want to take a step back, just put Robinhood on your portfolio. That's why I have such a small amount and averaging so slowly, because it's so risky. I'll probably buy more lump sums of Robinhood once we see it closer to $6 or even $7 per share, which implies a further 30% plus drop on Robinhood markets before the risk versus reward is more skewed in that reward favor. And remember, Robinhood probably is a long-term hold anyway. You probably want to hold for at least 2 years in either A, hopes that it gets acquired by a bigger company and they rejuvenate the brand, or B, they just become more and more profitable and they're on a steady incline to profitability is what we want to see from Robinhood over the next 2 years. Okay, the next stock under $10 per share that we got to talk about is SoFi Technologies, ticker symbol SOFI. And if we pull up the last month, they're also up 30%. They shot up around 28% just in one day on earnings. Okay, they're still down 50% in the year. And from highs, they're down 65%. And from the peak to trough, okay, they were down 75% at one point. They IPO'd for around $11 per share, so they're still under IPO price. Market cap is under that of Robinhood, so they're only a $7 billion company. And if you don't know what SoFi does, they're basically, like a bank. SoFi Technology provides financial service. It offers home loans, personal loans, in-school loans, credit loans. SoFi Technology develops non-leading financial products such as money management and investing product offerings, and leverage a financial service platform to empower other businesses. The company was founded in 2011 and headquartered in San Francisco. And you can see they have a similar story on earnings to Robinhood. They're on the verge of profitability, but they're still an unprofitable company. They're not missing or beating earnings by much. They're pretty much on top of analyst expectations. And then last quarter, they actually did beat expectations by only 1 cent. Okay, so here we have a bull case that was just updated August 2nd by Morningstar. The company's new acquisition was likely a major win as the number of accounts using the platform that they just acquired has risen sharply since the purchase. SoFi has enjoyed rapid growth driven by introduction of new products and broader adoption of digital banking. SoFi has managed to rapidly launch an impressive array of products and services, and the company remains the only firm offering a digital full service model. So, SoFi is definitely more of a long term. They're a disruptor of the banking industry, and they're looking for new age banking. Everything's online. So we see a bear case by Morningstar August 2nd. Many of SoFi's products and services are the result of partnerships or are easy to replicate, creating the risk of future competition. Like JPM or Bank of America could just easily step in, one of the big guys, and just replicate what a SoFi is doing. SoFi's near-term results will be affected by uncertainties surrounding the politics of student lending. That is a good point that I actually didn't even think about, because a lot of their loans right now are student loans. SoFi's revenue growth comes at the cost of rapid growth in the company's expenses, and SoFi's remains unprofitable, okay, which is the bad thing to see. Now, I have price alerts set around $5.50 at $6 per share, which implies still a steep drop from current prices. And remember, just recently on August 4th, they're around $8 per share. So they did bounce back a little bit. But if I'm able to buy at $5 per share, and even if I'm able to sell at $10 per share or $12 per share, that's more than 100% gain on SoFi. So with that being said, they're probably more of a longer term swing trade. I'm not looking to hold for years and years and years, but I understand that the growth in the share price might be delayed a little bit and could take longer. So that's why the risk versus reward is probably more worth it at that $5 per share compared to current prices right now. Now, if you want a true cheap stock, look into Matterport at $6 per share. Okay, and let me show you guys something very important when you're looking for a cheap stock. So you see how it says Matterport $6.11 per share. More importantly, you want to scroll down to the market cap, because you see it's only valued at 1.7 billion. And remember, some of the other stocks we were looking at are $10 per share, $7 per share, but their market cap is 10 times bigger, or at least 5 times bigger than Matterport, implying that there's more growth and less of a ceiling towards something like Matterport. So I think when you guys are looking for these $10 and under stocks and these cheap stocks, you are really looking for a cheap market cap, and that's what you really, really, really should be looking at, is the market cap. So that's a little lesson on cheap stocks, is don't look at the share price. It's totally irrelevant. Look at the market cap if you want to find a cheap stock. So Matterport is very cheap. It's only a $1.8 billion market cap, which in this market that we see today is basically like a penny stock. And we see they're up 18% on the week, and in one day they shot up around 40% on some earnings. They're up 60% in the past month. That's why we swing trade them. We are up around more than 40%. We sold a lot of our profits, over half of our profits already, and we'll probably take some more profits if Matterport keeps skyrocketing. Okay, I think the risk versus reward, if we can get closer to $4 on this one, or even $3.90, I think that's going to be going a long way for a swing trade. Even if I get in at $3.90, I think there's potential for short-term swing trade. So that's why I have price alerts set at $4, $4.15, because I think there's swing trade potential. I think there's also some mid to long-term potential with Matterport. Okay, if you don't know what they do, the firm's products include a 3D content platform, Pro 2 3D camera, 3D 60 cameras, virtual reality, and mobile apps. It serves as a residential, real estate, engineering and construction, travel and hospitality, commercial real estate sectors. Okay, so it's basically takes cameras of like your room. It'll take like a video, but screenshots of your room, and then you can upload that into like the metaverse and walk around like in your room. So it has like a patent on that kind of technology. If you're going to seriously invest in Matterport, a big amount of money, then you definitely want to do some more research into the patents. But it's kind of like Redfin, how you know when you go and do like a virtual real estate tour of a place, you can walk around in there. That's basically what Matterport does, and they have an edge in the competition. They fell big time because what happened is they got hyped up because the whole metaverse was right when they IPO'd at a horrible time. And everyone's like, Matterport, the metaverse, it's going to be the next big thing. So they went to $22 per share. And then we all know how the metaverse story unraveled. It obviously crashed, and that led Matterport to fall 87%. Obviously, that along with unprofitability, they coupled with not that much growth in revenue that was expected and user base not growing as much, okay, making it a little bit more risky. But if we go over to that net income, we can see that's what's really alarming, because they were in 2019, 2020, they were only negative, 30 million, 14 million. And then all of a sudden in 2021, they come in negative 300 million, which is down 2,000%. Okay, and we can also see that their balance sheet isn't the best in the world. We really want to see those liabilities lower on Matterport. So obviously there's tons of risk with Matterport. That's why mainly I'm waiting for $4, because the risk versus reward scenario is a little bit more attractive, and the short-term swing trade on Matterport is more attractive at those levels as well. Okay, so that leads us over to Palantir, right at $10 per share, $9.87. What can I say? These $10 stocks have been rallying in the last 3 months. Palantir up 31%, and at highs on August 5th, it was up 52% in the span of 3 months. However, if we zoom out, we see 60% fall in the year, and from highs, it's closer to 65%. But we can see Palantir bouncing back ever since they hit that bottom on May 11th. We see that bounce back of 57% consistently, and it looks like they're forming a new trading channel and trading pattern from May 10th to August 14th present day. So traders could look into the channel. We also look like we're at the support of that channel, so it might be a good time for a little swing trade or maybe a call option up to around $10, $11 per share on Palantir. And my friends, that's why it's important to look at market cap, because look at that $20 billion market cap. So it's already an enormous market cap, around 10 times or more the size of Matterport, yet the share price is pretty much the same $10 share price. So remember, look at that market cap price. Okay, and what Palantir does, if you don't know, they engage in development of data integration and software solutions. It operates through the commercial and government segments. The commercial segment offers services to clients in the private sector. The government segment provides solutions to the United States federal government and non-US government. So that's why a lot of people are bullish on Palantir, is because they think they're going to be selling a lot of their products to the US government, and that's a good client and good revenue source and income source, obviously. The firm offers automotive, financial, compliance, legal intelligence, mergers and acquisition solutions. Its products include Palantir Gotham and Palantir Foundry. We can also see they just reported earnings, and usually they're right on expectations or right below it or right above it, but this time they were pretty far off. I mean, they were 4 cents off, so it's not like the end of the world for Palantir, but it was a pretty big miss compared to the previous quarters that they've reported and how tight they've been in the past and how close to expectations they've been in the past. They also reported negative earnings when they were supposed to report positive earnings, which, is a bearish thing for short term. And if we look at the performance has the analysts divided, is what's interesting too. Palantir clocked 26% revenue gains in second quarter to 470 million, beating the consensus by about 2 million. Morgan Stanley maintained Palantir with an equal weight and cut the price target from $13 per share to $11. Contract delays with the government business led to the 2022 outlook that was below expectations. The decision to accelerate investments during periods of uncertainty weighs on net profitability. reiterated a strong buy with a price target of $20 per share. So some analysts have a price target of $20 per share. Some analysts have a price target of $11 per share. Regardless, that's a gain. However, I'm waiting for better buying prices closer to $6 per share, $7 per share, and I possibly might even be buying at $8 per share for a short-term swing trade. Okay, for long-term investing, I definitely have to do more of a deeper dive to see if this is something I want to hold for long term. But bulls say by Morningstar on August 8th, this was updated, the company has sustainable margin expansion opportunities via improvements in deployment costs and by offering commercially available solutions to prospects. Palantir has a strong government business and is diversifying into potentially higher margin commercial markets. It could become the data operating center for companies and industries, which is super bullish. So that middle line is probably the most bullish in my opinion. Palantir could be the answer to the problems the government and commercial customers face in successfully integrating large-scale in a cohesive and coherent manner to gain insight and drive actions. And if we look at some of the bear notes, Palantir will likely encounter stiff competition in the years ahead, including enterprise softwares, defense contractors, and even in-house development teams as its customers. Okay, and moving on to the last stock of the video, we have SPCE at $7 per share. If we scroll down, the market cap is $1.8 billion, so it's one of the smaller stocks on this list. We can see in the past 3 months, they're only up 15%, so they're not as up as much as some of the other stocks that we talked about on the list. The floor for this one recently was only around $5 per share. They're still pretty close to that at $7.11 per share. The recent high in March 28th was closer to $11 per share. And in September of last year, in August, about 1 year ago exactly, they were closer to $30 per share. If we scroll out to some all-time highs, we can see even $55 per share. So this is an interesting one. This is a meme stock, and this one's a total gamble. In my opinion, this is as gambling as it gets in two different aspects. It's gambling in the meme sense of things. You know, obviously it's a meme stock and that's gambling in general. And even the fundamentals of this company is gambling because it's a rocket company. So if they have a big explosion, bang, there's $100 million down the drain. They're only a $1.8 billion market cap. And each time they explode a rocket, that's detrimental to the company's health. Okay, so there's no guarantee this company is even going to make it. I would give this company a 50-50 shot of even being around in the next 3 years. Okay, 3 to 5 years. It's only a 50-50 shot. So this is definitely gambling. But if we look at the patterns of this stock specifically, what do we see? We see huge spikes just randomly, 200% spike, 200% spike, 200% spike. And what happens after those spikes? They fall. Okay, so this is a time that Virgin Galactic Holdings might be woken up for a 200% gains now that it's down in the dumps and no one's expecting it. It hasn't had one of those 200% spikes in a while. So the question is it dead in the water? And to answer that question, remember, it's a gamble. Nobody knows. It's a gamble. It's 50-50. Okay, it might spike up 200%. It might not. So for me, in that kind of case, when I'm dealing with a stock like this, I typically only like to put like $200 in, because even if you put $200 in and it spikes up 200%, you're looking at a nice little gain there. Okay. However, if you put $200 in and it starts dying and goes down 30 more percent, what I typically do on a stock like this is put a 60% stop loss. Okay, so I'm willing to lose 60%, but I'm willing to gain 200% on a stock like this. Now, something else that could also help you with that risk versus reward more skewed in your favor is if you buy closer to $5 per share on Virgin Galactic Holdings. That'll give you bigger returns and also lessen your risk. So I hope you guys really enjoyed that video, taking my time out to make these videos for you guys and loading them full of knowledge and packing these videos for you guys like no other YouTube channel is. If you appreciate that, smash the thumbs up, like this video. If you want to see some results from students that are in my option trading course, remember we do long-term trading, swing trading, and we also do option trading, which is the most lucrative. And you can click success number 5 or success number 4, whichever one you want, but the more recent ones are in the back of success number 5. You can see that these are all success stories just from recent weeks. We have hundreds of success stories just from this month alone, and we have hundreds, if not thousands, of success stories by now, and we now have over 1,500 total students a part of the daily stock market. So if you want to take a step and become a more advanced trader and not just look at $10 stocks and swing trades and actually do option trades and make crazy gains, 300% gains, here you can see 57% profit, 80% profit on Verizon. And if you go to some of the recent ones, like the Disney one we just did and some of the PayPal and Snapchats, people were making thousands and thousands of dollars. Here we see a 220% gain, $800 gain on Snapchat put, another one on a Snapchat put. This was a JPM put, up 178%. But if we go to one just from a few days ago, most of these are Disney ones that we absolutely crushed on because we were super confident in that. But if you've been following the channel, you probably are familiar with that. Go ahead and reach out to me. I officially shut down signups, by the way, but I am starting a wait list. So the wait list is for people who want to be the first one to get on the list when I open signups back up. So I officially I shut down signups now. I have the wait list going on. Message me on Instagram if you want to get on the wait list so you're one of the first people to get on the close friends list when it opens back up. Thank you guys for all the love and support you've been showing on the videos consistently, time and time again. And if you're new here, make sure you subscribe with post notifications on so you're in the loop with all my videos being released on YouTube where you get the full length videos. All right, guys, don't forget to share with a friend. I'll see you guys in the next video. And remember, don't time the market, buy the market. Peace.